Welcome to the WTR Small Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Ian Rodger, CEO of Jindalee Lithium, which trades in Australia under the ticker symbol JLL and in the US on the OTC under ticker symbol JNDAF. Jindalee Lithium is a metals and minerals exploration and development company and the owner of the McDermitt Lithium project in Oregon, bordering Nevada, and in close proximity to Lithium America's Thacker Pass lithium resource. Also joining us is my WTR equity research colleague, Dimitri Silverstein. Good morning, gentlemen, and thank you for joining us today.
Thanks for having me, Tim, and pleasure to be with you today.
Thank you, Tim. Glad to be back.
Ian, first off, thank you for joining us from Australia this morning. Let's kick things off with you giving our listeners a quick overview of Jindalee Lithium and its corporate strategy, as well as telling our audience about your professional background and what attracted you to Jindalee Lithium.
For sure. So my background, I'm a mining engineer by training. I started with a company called Rio Tinto across a number of large greenfield mine developments before transitioning into investment merchant banking, holding senior roles in London and Sydney. Then I went back into industry and sort of senior executive roles. Most recently, I was with a company called Oz Minerals. I was one of their senior leadership team, leading one of their major projects in the lead up to their eventual takeover by BHP for circa 10 billion Australian dollars. After that, I guess how I linked into the Jindalee opportunity is got to know the biggest shareholder, Lindsay, and the board of directors quite well, and just saw that the intersection of some real global themes in terms of the electrification of everything, the geopolitical tension, and critical mineral supply chains. And I just saw that the McDermitt asset had inherent strategic value that needed to be unlocked. So that's what's really attracted me to the company. And then in terms of Jindalee, we've got a really rich history. We've been listed for 23 years, as you mentioned, primarily on the Australian Stock Exchange. The strategy's been over that period of time as a project generator. We've created a lot of shareholder value over time, paid special dividends through exploration success, bringing projects up the curve, and then liberating that value for our shareholders. And then in terms of the last circa 5 years, which is really focused around McDermitt, we pegged the ground, which became the McDermitt project in 2018. It's with a view that these lithium sedimentary deposits would be the next tight oil or unconventional source. Fast forward a number of years, we proved that up into be the largest lithium deposit in the US. And as part of that strategy, we spun out our Australian assets, and that formed its own company and liberated funding for us in the process. And now we're a purely US lithium focused company with, as you mentioned, our flagship project being the McDermitt project on the border of Oregon and Nevada.
That's great background, Ian. I'll now turn the podcast over to Dimitri to ask a few questions.
Thank you, Tim. Ian, let's kind of go back to the beginning, or maybe 30,000-foot view would be the more accurate term. Lithium prices have been on a roller coaster ride in the last, 3 to 4 years. Can you talk about the market dynamics that have led to this, as well as discuss the current state of affairs? What are the demand drivers in near-term to mid-term outlook for metal price recovery? And also, can you touch on the importance, you mentioned it briefly in your comment, but can you expand a little bit on the importance of developing a domestic lithium resource and processing capabilities? In other words, reshoring or at least friend-shoring the critical metals and mineral supply chain.
Yeah, no, it's a good question there, Dimitri. I guess I'll start with the 1,000-foot view. We clearly had, winding the clock back a couple of years, we had a large run up in prices. Fundamentally, we have very strong growth in lithium demand, and there's a supply pinch. We saw a lot of stockpiling activity in China, which led to, a higher apparent demand, building of stockpiles, prices going from $6,000 a ton of lithium chemicals to, 80,000 per ton of lithium chemicals. And that persisted for a couple of years. Those, the cure for high prices is high prices. A lot of production came into the market, a lot of production that a lot of analysts didn't see in terms of Chinese production, in terms of African production. And then combined with some restocking, we've seen, the result of that in the recent period of time with, lithium price coming off in the order of say $10,000 a ton of lithium chemical. And but we're now in this situation where we've got really strong lithium demand that continues at double-digit compound annual growth rate. The first 3 months of this year, on an annualized rate, we're still, EVs are up 29%, energy storage is up circa 65%. So the fundamental drivers are still there. We've obviously got an oversupplied market though. But really it's an unsustainable position in Albemarle's call just a couple of weeks ago for their results. They were sort of pointing to the fact that 40% of the industry is underwater at the moment on a free cash flow basis. Clearly the price is below the incentive price to develop new projects. And so anyone who's been around cyclical markets knows what that's a recipe for. It's for, a rebound. And the $1 million question is when will that happen? There's a widespread on groups in timing. I think the more optimistic view is that the market will tighten into next year. There's other analysts with a longer dated view clearly. I know you had Joe Lowry on the podcast, and people like him are more educated to talk to the specifics of a price recovery. But clearly, it's just a matter of when, not if. And then you mentioned on why is domestic US production important? I think we sort of need to zoom out to understand the industry structure for a second, and really understand the difference between the mine supply and the chemical supply. The mine supply is where the lithium units come out of the ground, and currently that's dominated in particular from my home country in Australia. We produce in the order of 30-40% of the mined lithium units. A large chunk comes out of South America as well, and from brine resources. But China controls essentially the lithium chemical market. They process, they might produce, maybe 20% of the world's lithium metal out of the ground, but they refine and process in the order of 70%. So they really control the chemical market, which is really important because that's what goes into the supply chain in terms of batteries, etc. So it doesn't matter if you've got lithium units in Australia, you need to find a way to get it into the battery value chain. And so and from a US perspective, there's only about 5,000 tons of mine production a year in the US, very small mine in Nevada. And so we're basically, the US is basically very dependent on China for their lithium chemical supply. And so therefore, when you're looking at, how do you decouple that, you need to find sources of lithium in the US and get them into a lithium chemical format. And so that's one of the real strategic drivers of our project, and others like you mentioned, Thacker Pass, that they're really efficient way of taking lithium in the ground through to lithium chemicals for the supply into the battery value chain, which will then allow over time the decoupling of that strong link at the moment to China.
So it sounds like you can have, if the current administration wants to stand up the processing industry in the US as well as the mining industry, but something has to come first. And if you develop the processing industry and you have to ship lithium either from Chile or Argentina or across the world from Australia, it's not likely to be very cost competitive. So you really do need, it seems to me, a domestic supply of the metal, the lithium units, as you call them, to justify the building of the production and refining infrastructure to get to the lithium carbonate and lithium hydroxide. Is that?
Yeah, no, I think that's exactly right. Is that what we need is an efficient way to get to lithium chemicals, and so a lot of the focus sometimes is on the raw material side sort of that. But you raise a very good point in that that is relatively easy to source out of, say, Australia or Brazil or Chile, but you've got to get that into a a format that's usable in the domestic US supply chain, and then you got to factor in shipping that around the world, building that processing capacity. So developing these projects domestically sort of shorten the supply chain, reduce the overall risk, and really enhances US energy independence.
Sure, sure. Ian, you touched on the fact that McDermitt, at least for right now, looks like it's the largest lithium reserve that we have in North America, at least on the discovered side. Can you talk a little bit more about how this project fits into the paradigm that we just discussed? Primarily, can you give us some idea on the size of the project, the grade of the metal that it contains, and the projected production costs? It's not, you mentioned that it's not a typical source of lithium. That's either spodumene out of Australia or the solars up in the Andes in Latin America, as you mentioned. But it's not as far afield as, for example, direct lithium extraction technology would need to develop to use unusual resources like geothermal brines. So where does McDermitt and the sediment resource that you have there, where does it stand in terms of size, grade, and projected production costs to the extent that you've done a pre-feasibility study?
Yeah, good questions. I'll start off. Yeah, you mentioned McDermitt's a lithium sedimentary deposit, and we're just completed a pre-feasibility study. And so, I mean, again, the context is you mentioned their Lithium Americas. So we're located about 35 k's to the north of their project, which is on the Nevada side of the border. And so we're in the same geological formation, the McDermitt caldera. These deposits form as sediments at the bottom of a former crater lake. But you mentioned also that we're the largest lithium deposit in the US. We were until January. Lithium Americas Thacker Pass project is now actually the largest lithium deposit in the world. But essentially, these lithium sedimentary deposits, that the McDermitt caldera is easily the largest source of lithium globally. These deposits are huge. McDermitt is top 5 lithium deposits in the world. It's a massive deposit. In terms of the PFS, we completed that in November last year with the help of Fluor Corporation as our lead engineer. The PFS outlines a really long life, low cost project, 63-year project life, circa 47,500 tons of lithium carbonate production capacity over the first decade. Low cost operation, bottom half of the global cost curve, highly competitive in respect to our North American peers. And as I mentioned, the life, that's only using 15% of the resource base. So really, there's a whole lot of untapped optionality and expansion potential that we haven't really gotten into at this point in time. And then in terms of the project metrics, really strong forecasts, and in a lot of ways looks like a copper porphyry return profile. There's a significant capital investment required, but very high margin with annuity-like cash flows over multi decades, and I mean that speaks partly to our strategy for developing this asset through partnerships, which maybe we can touch on in a second. But just to bring back the conversation to the PFS, was really high quality piece of work done by Fluor. They're one of obviously they're one of the largest US construction companies, but they're also one of the few groups that have done a lot of work in these sedimentary spaces. And as you point out, there is no these are standard unit of operations used throughout industry in our flow sheet. There's nothing new or novel as part of that. As part of our PFS, we've tested the flow sheet from mined ore all the way through to battery grade lithium carbonate. There's more work to do at a larger scale, obviously, as we go forward, but we feel like we've got a very strong pre-feasibility number delivered by very high quality engineers, and secondly, we've managed to do that on a really tight budget, and so we haven't included a lot of the normal trade-off and optionality type work that you would normally do at that PFS stage. And so we think there's big opportunities to further improve on those numbers in the first stage of a feasibility study, which is our next piece of work.
Okay, thank you for that, Ian. That sounds encouraging, and I'm glad to hear that there's no new unit operations required to get this project up and running. As a ex-chemical engineer myself, that's always a pioneering a new technology or a new process is always a tough sell.
Absolutely.
I want to go back to the point that I mentioned in a previous question. There's been a sea change in Washington when it comes to support for domestic mining and processing. There have been a number of executive orders that have been put out. Everybody's moving at seems like at a faster pace. What can you tell us about the policy tone and the actions coming out of the new administration? And what impact, if any, can it have on the mining industry in general, and on the critical metals mining in particular, and maybe even Jindalee in particular?
Yeah, good question again. I think, and there's been a number of obviously executive orders put out by the new administration that touch on critical minerals, and without diving into the individual ones, there's just been two major I guess impacts, all positive. The first is various ways to look to enhance permitting timeframes. Clearly, the US is at a disadvantage to other jurisdictions, like, for example, Australia, in terms of permitting mines. It just takes a lot longer in the US. That's a fact. And so a lot of the executive orders have spoken to that in particular. The second is around funding, directing more funding to critical mineral projects. And so a lot of the executive orders have directed more funding to Department of Defense through the DFC, etc. So we're encouraged by both of those elements. In terms of what the tangible outcomes for us is that we were added to the Fast 41 initiative as one of a limited number of transparency projects last month, and that really looks to sort of fast track the permitting process through not necessarily changing the rules, but just trying to increase transparency of the decision making and foster collaboration between agencies to get to the outcome in a quicker manner. So we've been very buoyed by that development, and that certainly helped also attract a lot of interest in the project, because if you look at that list, we're one of the lower profile projects, smaller market caps, and really think that it's a really nod to the strategic value of this asset.
Yeah, I saw that press release where you made that list, and I think it goes back to the March 25 order, executive order, when as part of it they had to be the Commerce Department and all the other departments had to come up with a list of most promising projects, or the ones that are most impactful, rank them, and then really sort of expedite the evaluation process and the approval process. And that's the bucket that you've ended up with, correct?
Yes, that's right. Yeah, we're on that list. Yeah.
Gotcha. Okay, well, let's talk about the future for a moment, Ian. What are your near and midterm goals and targets for Jindalee? What should people interested in following your stock and your story look for in the next few months to, let's say, a year?
Yep. So maybe I'll start with the higher level. I mean, I think we've completed a pre-feasibility study. The next stage is a feasibility study, and then obviously into development and production. And for the broad time frame, we're targeting having a investment decision circa 2029 and production in the early 2030s. There's a lot of sort of variables at play there, but that's important context to understand our near-term priorities. And in terms of, I guess, this year, our key priorities are finalising our exploration plan of operations, which is a key permit to allow us to do more drilling on site, which is required to deliver the sample required for further test work and engineering, etc., geological confidence. And so we're expecting that'll get approved later this year, which we're very excited about, and it'll be a key catalyst for us. The other key priority for this year. Sorry, the second key priority for this year is really seeking seeking a potential partner to help fund that next stage of work through feasibility. As I mentioned, it's a very large project. So we're looking, similar to Lithium Americas, who brought in General Motors and other, groups in the, lithium space that have, executed the same playbook, is looking to bring in a larger partner as part of the feasibility piece to help shape the scope, provide input and links into the customer base, but also position ourselves for construction financing in a couple of years' time. So we appointed some advisors around that in earlier this year in March, and so we're in the early stages of that partnering process at the moment, and really that FAST-41 initiative has obviously helped catalyze a bit of interest, and we're also looking at outside the strategic partners. We're also looking at potential financial sponsors and other sources of US capital that are interested in developing these assets. Then the third key bucket for this year is around government support. Obviously, we've had this FAST-41 announcement, but we've got a Department of Defense grant application afoot, which would potentially co-fund the next stage of work, i.e., that bigger drill program I'm talking about, and feasibility study and test work. There's no certainty on that, but we're excited about the direction of travel in terms of the new administration directing more funding to this area. So that's likely again a later in the year milestone, but one that we're pretty excited about. Then depending on a few of those outcomes, will determine exactly when we commence that larger scope of work and commence the feasibility study. And I hope that makes sense to Dimitri. Please let me know if you've got any more questions.
No, that actually does make sense. Thank you for that, Ian. That's very helpful, and I think it gives people an idea of what to expect in the next year, but also what your longer term plans are. Before we end this podcast, is there anything you'd like to leave our audience with in terms of how to think about and how to view Jindalee Lithium, both as an asset or as a resource and as a stock?
Yep, I think I guess a couple of things I'd like to leave people with. The first is, we've touched on it, is that McDermitt is a highly strategic asset. It's got really significant fundamental value. From a corporate side, we haven't really touched on it, but we're incredibly cheap. I'm sure all lithium companies say that, but if you look at our presentation, compared to our peer group, we're one of the most advanced and one of the most cheapest stocks, even in a bear market, and even with our recent share price appreciation. So that's a really key point. And the last one is that we've got a lot of number of material catalysts in the pipeline I mentioned that could really help advance the project, and we've slowly been delivering on our promises over the last 12-24 months on progressing this project, and we look forward to getting through these other milestones towards the end of the year. And so, in summary, we offer sort of significant leverage, to a recovering lithium market with a truly strategic asset.
Thank you.
That was actually an awesome summary, by the way, Ian. I'm sure that our investor audience is going to love to hear that. So thank you for joining us today, Ian Rodger, CEO of Jindalee Lithium, Australian ticker symbol JLL, and OTC ticker symbol JNDAF. And thanks to my equity research colleague, Dimitri Silverstein, for joining us today. A special thanks to the WTR producer and editor of the podcast, Joe Brunetto. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We'll see you next time for another edition of the WTR Small Cap Spotlight podcast.